It's our strong belief that IB contracts at some point will be banned everywhere. So here's your first trade idea. The morning you wake up and you see the headline, IB agreements banned in UK, Europe, US, everywhere. What happens to the publicly listed brokerage stocks? They're down 80%. 40–50% of their clients come from the distribution of individuals introducing people onto platforms. So that's gone. Distribution and marketing is gone. But if you sit there and tell them that, maybe the trade doesn't exist because they can save themselves before it happens. So the conversations we've always had is, this is going to happen and you know it's going to happen. So you need to set up infrastructure internally that hedges your business against that happening. And the day it happens, all you have to do is send out an email to all of your educators and tell them, here's the new contract, sign it or go away. It says 0. And it can all be sorted out in a day, and you can make a public announcement and say, our distribution stays the same. And where else are they going to go? Because if they've been banned everywhere in the country that they're in, they can't say to the brokers, oh, I don't like that, I'm going to one of your competitors, because they've been banned everywhere. So the infrastructure can be set up very quickly, very efficiently for the brokers to respond to that in the future. Retention is a big one. Instead of having to spend marketing dollars all the time to open trading accounts that are opening more trading accounts than they're closing down, it lowers marketing dollars because you give them a coupon business. It's like a bond. So if you put 100 traders, like institute traders, onto a brokerage platform, and they're trading 2 or 3 times a week, and they never blow up, it's like the broker owning a bond. They're getting paid a coupon constantly. What if a high percentage of your guys make money? Well, they don't like that either. That's annoying. So they're told to hedge, and if they don't, they've only got themselves to blame. And we don't want to hear them complaining like and crying like bitches on the phone. So what are they, these guys? The trading educators that have got volume and size incentive. They're essentially the brokers in disguise. They're incentivized by the 4 revenue streams. Well, the three as well. 3 because they get the financing. So not the OTC game, but the broker is paying them who gets the OTC game. So they're incentivized indirectly. They just want you to trade as frequently as possible in the biggest size possible. So they're always going to show you trading strategies that pay them, not you. Charlatans, they're known as. Guys who pretend to be traders, but they're not. They're fake traders. They're internet marketing imposters. Here's the red flags of a charlatan educator who pushes the inversion narrative and is essentially working for the broker. Day trading always works. Well, we know it doesn't always work because the trader is a slave to volatility, and the trader doesn't tell the market what's possible. The market tells the trader what's possible. Remember our euro-dollar example, 106? Buy and sell for the next 250 trading days. Buy at 106, sell at 106. If there's no volatility, you can't make money. Impossible. So day trading doesn't always work. In fact, it works in the minority of cases. It only works in history in the last 15 years, 20% of times, on average. And that is a statistical analysis. You can't argue with it. We're looking at US equities in particular, specifically, and the major Forex pairs. And 80% of the time, it hasn't worked. The odds are not in your favor. So what does that mean? You're being told the inversion narrative. You're being told the opposite of what's true. But what does that do for the broker and the educator? Guaranteed volume every day. If you absolutely believe that day trading always works, or works in the vast majority of times, in history and going forward, what are you going to do? Well, you're a guaranteed idiot. You're guaranteed to trade all the time. Fantastic, perfect client. They get paid, not you. Next one. It's better to not have overnight risk and to exit your positions at the end of the day always. Why is that good for the broker and the educator? Because you're guaranteed to trade twice a day. You enter a position and exit. It also just means that the educator has no idea about risk, because risk can be hedged out overnight. Risk can be hedged out for months with assets that are correlated. Next myth, you can make a monthly income from trading. Well, we know that can't be true. Why? Because you need volatility. What's one of the big educator slogans? Make $10,000 a month trading the international Forex markets. Well, what if the Forex markets don't move? You're not making $10,000 a month trading the international Forex markets. You're losing, and they're actually right. You are getting the life you deserve because you're an idiot. But what does it mean if you believe that narrative? It means you're a guaranteed fool. It means you're going to chase the monthly income. You're going to trade all the time, chasing the income. And what happens if loads of guys chase the income? Well, you get an income. It's the inversion narrative. Trading is easy. You just need to follow a few lines on a chart. Technical analysis. Here's some signals. Follow the lines. Buy here, sell here, buy here, sell here. What does that do? Guaranteed trades. It's the mice hitting the pedal, trying to get a piece of cheese. Psychology is the most important thing in trading. If that's your only narrative, you've got nothing. If you've got a strong mind, you'll be good at risk management and make money. If that's your only narrative, you've got nothing. You don't have a trading strategy. All you need is risk management to be a good trader. Nonsense. You need ideas. If you've got amazing ideas, you can be a terrible risk manager and still make money. Next narrative, lifestyle messages. Get the life you've always deserved. One day you'll own a car like me. What are they trying to do there? They're trying to just distract you away from the reality of the industry and the realities of trading with hopes and dreams. And they're not living that life. It's a fake life because they're not even real traders. They're fake traders. And if you remember right from the beginning, we looked at boomers and Gen Xers and the problem with pensions, everyone knowing that they can't retire. This is the crux of the problem. When desperation from the middle class fools meets conflict of interest. So just two sides of the equation. When desperation meets conflict of interest, only bad things can happen. It's all designed to distract your attention away from what's important. And they're going to go to extreme lengths to convince you otherwise. The inversion narrative is huge outside the United States, much more so outside the US. But what about inside the US? We've already mentioned this in the example with you about how the commission is not paid as a percentage, it's a flat rate. But they're still the broker's bitch. They're only going to push the inversion narrative because they need a brokerage platform to put people on, to legitimize themselves. Because if they have the branding of brokerage platforms behind them, and they're working with them, and their introductions have a place to go to, it legitimizes their bullshit. They need a home. They always need a home. And obviously you've seen we turn the tables on the broker, and we've got 370 guys globally. When you've got a lot of guys who do quite well, and you provide a coupon business, the broker likes you. And you also get significant community leverage. Because if you have 100 guys on a platform and they do well, and it's a coupon business and you've provided a business hedge to the broker, do they want to lose them? Of course not. So what does it look like in practice, the inversion narrative? 1, IB agreement. I don't think we have to beat that drum again. But one thing you should absolutely do if you go to get taught by someone in the financial markets who professes they're an educator and they're good at teaching and they're a guru trader, ask for their IB agreement. If they're introducing you onto a platform, the contract has to be in place. It's illegal for the broker to not have the contract in place. So if the educator won't give it to you, where do you go? Well, first of all, what's the message if he won't give it to you? What's the message from the educator if they say, no, I'm not giving you a copy of my contract? They've got something to hide. Or they don't have a contract, which means it's illegal. So either way, it's bad. Where do you get it from? Well, actually, contact the broker and ask for the email address to their compliance desk. Under regulation, they absolutely have to provide it to you. They have to have full disclosure of the relationship with the educator. So contact compliance and go behind the educator's back. That's how you find out if they're incentivized by volume and frequency. Regulatory history is a big one. There is actually a real definition of what a professional trader is. So if someone claims that they are or have been a professional trader, you can find out with a few clicks of a mouse. Why? Because if they've been a professional trader, the definition is they've performed a controlled function. And the controlled function in all geographies is trading other people's money, investors' money. So investors will be in a hedge fund, pension fund, but also investment banks. The investors are the shareholders in the bank, and the guys at the bank trade the shareholders' money. They control the balance sheet. So they are a custodian of third-party capital, and they have to be regulated. What do you have to do to get regulated? You've got to take your exams. And there's a public record everywhere, in every geography. Another easy way of finding out is if you know someone who's got a Bloomberg subscription. If you know someone who's got a Bloomberg subscription, just ask them to type your name into the search field, or the name of the educator, and then click on, I think it's 8, career. And it comes up with the full career of the person who was a subscriber to Bloomberg. Now, it's difficult for retail because it costs $25,000 a year, but Bloomberg records the career of professional traders and professionals in the market. Not hard to find if you do a bit of digging. You can literally do a little bit of digging around and find out if someone has actually been a professional trader in their career. It's not difficult. But people just don't understand what the definition is between a professional trader and a retail trader.